Hello students, let us start with the topic Statement of Profit and Loss and Balance Sheet, which is a part of a chapter analysis of financial statement. Before that, let me give a brief intro about myself. My name is Prerak and I am a CA student from the Institute of Chartered Accountants of India. So let us start. Now, let me give you a brief overview of financial statements. Financial statements are the end products of accounting process and are prepared at the end of the accounting period to reveal the financial position of the enterprise at a particular date, means for example 31st March or 31st December, and the result of its business operations in an accounting period. Simply meaning that these are prepared after the trial balance which you have covered in class 11th, and this statement shows the overall position and health of the organization. As per section 240 of the Companies Act 2013, financial statement includes balance sheet or position statement, statement of profit and loss or income statement, notes to accounts, and cash flow statement. Now, balance sheet. Balance sheet is a statement of assets, liabilities, equities of a business, and it is prepared to show the financial position of the company at a particular date. The balance sheet of a company is prepared as per the format prescribed in Part 1 of Schedule 3 of the Companies Act 2013. The Schedule 3 prescribes only the vertical format for presentation of the financial statements. See children, there are two formats for preparing the balance sheet. One is the vertical format, which you will now be following, and the horizontal format, which you have been following till now. Now the company will not be having any option to use the horizontal format, which you have used in class 11th, like एक तरफ आप liabilities लिखते थे and एक तरफ आप assets लिखते थे. So that will not be allowed now. Children, one more important thing to remember is you need to learn the contents of the balance sheet in the same manner they are given. Any changes in the format will make the balance sheet go wrong. It means जिस सीक्वेंस में आपको बैलेंस शीट के कंटेंट बताए जाएंगे उसी सीक्वेंस में आपको बैलेंस शीट बनानी है. अगर आप ऐसा नहीं करेंगे तो देन योर बैलेंस शीट विल नॉट बी राइट. Okay, now contents of the balance sheet. First of all, assets. An asset is a resource controlled by the enterprise as a result of past events through which future economic benefits are expected to flow to the enterprise. Simply, it's because of assets by which operating income comes to the business. For example, you are having a plant and machinery. Now, if you are having a plant and machinery but natural, you will be producing goods for the purpose of selling. And when you sold those goods, you will be getting what? Profit, which is your source of income. So indirectly, the machine is the source of income for all the profits which you have. So machine is an asset. Then we come to liabilities. Liabilities is a present obligation of the enterprise arising from the past events, the settlement of which is expected to result in an outflow. For example, loan you have taken. Now it's the time for repayment. So the repayment is a present obligation, and thus when you will be paying that loan, cash will go out of the organization. So thus it is forming a part of your liabilities. Next we come to capital or equity. Capital or equity is the residual interest in the assets of the enterprise after deducting all its liabilities. Simply meaning is that all the money which is invested by the owner in the business is called as capital. Now, this is your balance sheet. First you will be writing on the company name, then balance sheet as at which date you are making, 31st March 2020 or 31st March 2019, like that. And then you will be writing amount in rupees. First is equity and liabilities. Under that, the first main heading is shareholders fund, and the first subheading is share capital. Then the subheading B, reserves and surplus, and then subheading C, money received against share warrants. Now, let me first explain you what is this note number column which is between particulars and amount. See children, note number simply represents your detailing of the balance sheet. आप सबने पढ़ा है कि शेयर्स हमारे दो टाइप के होते हैं, फॉर एग्जांपल इक्विटी एंड प्रेफरेंस। सो जब आपकी शेयर कैपिटल आप टोटल करेंगे, क्लबिंग करेंगे, तो आपका एक हिस्सा होगा इक्विटी शेयर कैपिटल एंड द अदर वन विल बी प्रेफरेंस शेयर कैपिटल। सो इन दोनों का बाइफर्केशन जो है, इन दोनों की जो डिटेलिंग है वो आप कहाँ दिखाएंगे, नोट्स टू अकाउंट्स में, विच वी विल बी स्टडिंग ऑन लेटर। Next we come to reserves and surplus. These are all your accumulated reserves and surplus which are helpful for the business for the future uses. Some examples can be debenture redemption reserve, capital reserve, securities premium reserve. All those reserves will come under this subheading. Next we come to money received against share warrants. First of all, children, understand the meaning of share warrants. Share warrants are just a piece of paper which gives you a right over the shares of a company. For example, company 10,000 shares market में ला रही है for the public to subscribe, and you have a share warrant mentioning that 1,000 of these shares will be handed over to you. So whenever you will be presenting that warrant, the company first will have to give it to you, and then the rest over of 9,000 shares which are left, then it will be given to the general public to subscribe. So this is called as money received against share warrant. Share application money pending allotment. Simply, whenever a company calls for the amount of shares, it always calls in stages. For example, if a face value of a share is rupees 10, it will call rupees 4 in application, rupees 5 in allotment, and the leftover money in the subsequent calls, which you will be learning in accounting for share capital. So for example, the company have received the money for the share application, but till now have not allotted them the shares. So it will be forming a liability for the company. Next we come to non-current liabilities, under which long-term borrowings, which I think you might know, then deferred tax liabilities, other long-term liabilities, and long-term provisions. In this, you need to understand the term of deferred tax liabilities. Children, deferred tax means the difference between what you have to pay, that amount of tax what you have to pay, and the amount of tax what you have paid already. That is called as deferred tax. Now, for example, you have to pay a tax amount of 10,000 and you have paid an amount of 8,000. So the 2,000 which you need to pay more, that is your deferred tax liabilities. Okay. For example, you have to pay a tax amount of 10,000 and you have paid an amount of 8,000. So the 2,000 which you need to pay more, that is your deferred tax liabilities. Okay. On the other hand, for example, you need to pay a tax amount of 8,000 and you have paid an amount of 10,000. So you have paid 2,000 more. So that will be called as your deferred tax asset, which we'll be learning in the subsequent slide. Now next we move on to the current liabilities: short-term borrowings, trade payables, other current liabilities, and short-term provisions. And then we come on to the grand total of the liabilities side. Now let's move on to your asset side of the balance sheet. In this, the first main heading is of non-current assets, under which the first subheading is fixed assets and the first subheading is tangible assets. Tangible assets simply means the assets which can be touched or seen, for example machinery. Then we come on to the intangible assets, assets which cannot be seen or touched, for example goodwill, patents, trademark, copyrights, softwares. Next we come to capital work in progress and then intangible assets under development. Children, it simply means, for example, you have an intangible assets, for example say software. So this software is under development and this software is being developed for business purposes. So it will be categorized under this head, intangible assets under development. Then we come to non-current investment and then deferred tax assets. As I have told you earlier, deferred tax assets. One more thing to remember here is you will only show either deferred tax liabilities or deferred tax assets. That's why the word net is used in front of these assets and liabilities. Then we come to long-term loans and advances, and the last subheading is other non-current assets. Next we come on to the main heading of current assets, under which your current investments, inventories, trade receivables, cash and cash equivalents, short-term loans and advances, and other current assets come into play. Inventory means the stock of goods which your business has. For example, inventory can be of raw material, finished goods, work in progress, loose tools. Now we come on to trade receivables. Simply, it's the money which the debtor owes to you. Means you have a right from your debtor to collect that money. It also includes your bill receivables. Then cash and cash equivalents includes all your cash balances, bank balances, checks, demand draft, and then you need to take the grand total of the asset sides. And children, as you are preparing balance sheet, so it's not a matter to tell that the asset side total will be equal to your liabilities side total. Now let us look upon the meaning of certain terms which we have already covered. So the first is reserves and surplus, then we have long-term borrowings, loan, debentures, term loans. Then we come to long-term provisions, provision for provident fund, provision for warranties, then current liabilities, short-term borrowings and other current liabilities. Then we come to short-term provisions, tangible assets, intangible assets under development, long-term loans and advances, current assets, current investment and inventories, which I have explained you: inventory of raw materials, work in progress, finished goods, stock in trades, stores and spares, loose tools. Then we come to trade receivables and cash equivalents. Now this is your sample balance sheet. It will be including all the contents which we have studied till now. And now look at those 5 bullet points which are given at the last of the balance sheet. Money received against share warrants, share application money pending allotment, deferred tax liabilities net, other long-term liabilities and capital work in progress are not included in your class 12 syllabus. So it was just for explaining you, and you need not pay much attention to these 5 topics. Next we come to statement of profit and loss. In this you will be writing the statement of profit and loss for the year ending and then amount in rupees. As same thing I would remember, children, the contents of statement of P&L also should be in the same sequence as soon as they are given. You cannot mix, like you cannot take other income above revenue from operations. You will be first taking revenue from operations and subsequently then you will be taking the part of other income. Then you have total revenue, then expenses, cost of material consumed, purchase of stock in trade, changes in inventories of finished goods, work in progress and stock in trade. Then employee benefit expenses, finance cost. Finance cost here means all the costs related to your debenture interest, loans, loan interest. Then depreciation and amortization expenses. Depreciation I hope you have studied in class 11th. And then the other expenses. Expenses which are not being able to be fitted into any of the above previous heads will fall under this other expenses head. Then we take on the total of these expenses. Next we take out profit before exceptional and extraordinary items. That is, profit is equal to total revenue minus total expenses. Next we add exceptional items, means sale of scrap. Now sale of scrap is an exceptional item, means you do not carry on in the normal course of your business. Exceptional items and extraordinary items have one and the same meaning. You do not carry on these activities in the normal usual course of your business. So see the 9th column, the main column is profit before tax. Next you reduce your tax expenses. It is your current tax or deferred tax. Deferred tax has the same meaning as I have explained you in the earlier slides. And then you have the last column, profit and loss for the period, and you will be writing the period 1920 or 2020-21. Okay, now here we come on to the meaning of certain terms. These terms I have explained you earlier also. You can just have a look for your quick reference. Revenue from operations, other income, cost of material consumed, purchase of stock in trade, changes in inventory of work in progress, finished goods and stock in trade. Then we come to employee benefit expenses, finance cost, depreciation and amortization expenses and other expenses. Now notes to accounts, as I have told you earlier, notes to account simply is a part of financial statement which represents further details about the contents of the balance sheet as well as the profit and loss. Children, simply it's similar to the working notes which you have keep on doing till now, just that it is in a more presentable and tabular format. So okay, now we come on to the uses of financial statement. So first of all, the first point is bridging the gap in management. Second, availing credit from lenders. For example, you need to take a loan from a bank. Now these days bank also see your financial statement in order to have a look at your financial position. Will you be able to pay the loan when the time come, or will you be not? So they also need your financial statement. Then uses for investors, use for government, use for stock exchanges, and so on. Now we come on to the limitations of financial statements. See children, it's not a reflection of the present financial position. You always remember that the financial statement which we prepare are for the previous year. For example, in 2021 you will be preparing the financial statements of 1920, so it does not shows the present financial position. Then there are possibility of biasness, means for example, since it is being prepared by a human, so errors are likely to be there, judgments will be there, and all the things will be made, all the attempts will be made in order to hide the true financial position and make it more lucrative or attractive. Then we have absence of vital information, then lack of qualitative information, and lack of details. So that's all from my end. I hope you enjoy. Thank you.